Alright, I'm gonna give everyone a little time to get in here. Just a little bit. When I start seeing the viewers get up to like 30, 40, we'll get going. Alright, we got 22. Not bad. I'll wait just a minute. We're not technically scheduled to start for another minute, anyways. I mean, hopefully people capitalize on this. If they don't, I just won't do it anymore. Right? Just do it like every month or something if people don't make use out of it. All right, we're at like 40 people, so we can go ahead and get started. You can ask questions either on YouTube or in Discord. If you want me to review like a setup or something like that, or anything that requires an image, you can just post it in the Discord. That's definitely the best way to do that. Like, absolutely. I'll move this over here. And we can just keep an eye on the Bitcoin price while this is going on as well. Hi, question 1 regarding the RS Plus. Is it an indicator that requires tweaking depending on market conditions every few months or dependent on volume? I mean, it depends. Like, look, the RS Plus. This is just it's a combination of oscillators with specific tweaked settings. It's going to work fine in any market that isn't riding a very heavy trend, right? So obviously you can see here it kind of works like, this is granted you have bounces, right? So you can go ahead, like you can, if you don't want to put a moving average on it, like you can put like a trend line down, right? Something, a loose. Right, so it'll look like this. And you could just say, all right, well, I'm just going to close at resistance on all these. So you get long prints, you long it, close at resistance, long, close at resistance, long, close at resistance. You can do it that way. Similar, like if you're going to have moves like this, obviously these short signals got fucked, right? Because we're in a heavy trend. This is a trend. So you're going to get fucked on trending markets. There's no way around that, right? There are indicators that work good in sideways markets, which are oscillators, and there are indicators that work good during trending markets, which are going to be like moving averages. Honestly, moving averages, pretty much. Ichimoku is going to be another one. Generally, you want to use oscillators in conjunction with something that gives you a trend. Whether that be a moving average or just drawing a trend line on like so, or using something else to determine the market trend at the time. I mean, overall, the goal is always to, like right here, you can see just pumps right up, like just goes vertical. There's no way to avoid getting trapped on this, right? Absolutely no way to avoid getting trapped on this. That's one of those things where it's like kind of like market experience is going to come in handy with this. I mean, you can put a trend line on this as well. Right, and I mean, it's vertical as fuck, but if you're going to take these short signals, you're taking profit at trend, which is, barely any move at all. You might make a few ticks of profit. That's it. But otherwise, like I use the RS Plus a lot, obviously. I only use it when we're in a range. And if you're just trading Bitcoin, you can usually tell whether we're in a range or whether we're trending. Right? You can sit and watch the charts for 10 minutes. We're either going to be doing something like this, and we'll be in a very noticeable trend, or we'll just be kind of sideways, like we are right now, just kind of consolidating sideways. Which means, I'm hitting every side of these. Right? If I get an early long here, I'm still hitting this. I'll let it go underwater a bit, and I'll just hit the next one and hit the next one because it's going to come back. And, you just invalidate yourself underneath the range low or something. That's probably the best way to do it, for sure. But, I mean, there isn't really a concrete tool I can give you other than just use basic technical analysis and use just market knowledge. Bitcoin doesn't exactly, I mean, great, look, I can't say that Bitcoin doesn't pump and dump anymore because it does, obviously, right? But it doesn't move $800 or, 15% in a matter of minutes anymore, right? If Bitcoin's going to do a big move, it tends to be grindy. So because it's grindy, you have more time to react. So you can be like, oh, we're in a grinding trend. I'm not going to take these short signals when we're grinding up. Or if I do take these short signals, we better be way above the trend line because I'm going to close them on the way back down. Right? These are just bad risk reward here. All of these. I mean, granted, you could take this short and scalp it down, 50 points. It's not too bad. Most of them are pretty fucking terrible though. I like to use it at least in conjunction with like the normal scalper, because like if I get short prints, these yellow highlighted candles, once we lose trend, I'll go short and I'll just hold it, because I've got short signals telling me I should consider a short. Then the scalper flips yellow, and I'm like, okay, I should really get short on this, and then I wait for it to break trend, get short, and then ride it down. And the same thing goes for longs, right? You got longs here. Pretty steady trend down. I think, all right, well, I'm going to I should look for longs. I'm going to take them. I got scalper highlights here now. The minute this breaks trend, I'm going to get long and just kind of ride it. And it breaks, and you can get long, and you can ride it. I mean, you can ride it back up to this little block here, or you wait for this to happen. That's a long time to hold a fucking trade, though. I wouldn't have held for this. I would go for the 15-minute block here. Right, so I'd wait for a trend to break. I'd get long. I'd add some more on the retest, and then I'd close it up at the 15-minute block here. That'd be the best way to do it. Obviously, this is in hindsight, so everything seems simpler. Okay, there's 49 of you in here, and no one's asking questions. Unless you're all profitable traders already. Or you've had an epiphany and you understand where you're going wrong, and you've made a commitment to never go wrong again, and you have a concrete plan to do so. Well, it's the very first one, so I'm willing to give it a little bit of time. I mean, otherwise, I'm just gonna pick like a fucking category to lecture people on. A few questions in YouTube. Is my YouTube not updating my chat? Oh yeah, my chat wasn't updating at all. There it goes. Fucking weird, alright. Okay, I'm gonna start from the top. Anish. Rough template about how to go developing a trading edge or strategy. That's actually a really good question, because it's really fucking hard. I'm sure almost everybody has been like, yeah, I'm gonna sit down and I'm gonna get a chart setup going. I'm gonna add my indicators and I'm gonna figure out a concrete strategy, and then I'm gonna stick to it. And they do it a few times, then it stops working, and then they do something else or whatever. Or it doesn't work out according to plan because everything looks better in hindsight. The first thing that I do when I'm looking at a new strategy, obviously, like if you do it for long enough, you can look at something and be like, oh shit, this has an edge. Like I was just messing around with some mean reversion today, and I was like, shit, I think this has an edge. And it obviously does have an edge. I started running it right around here today in the Discord. Yeah, it was about 12 UTC. And I was like, fuck me, I'm going to run this. I think I can use this volume weighted moving average to kind of take profits here. And I'm just going to hit every side of these bands. I'm going to scale it up. So I'm going to scale 5 layers. And I'm going to hit every side of these bands. So long as we don't do a massive trend, it's probably going to make a lot of money. And for the times that we do a massive trend like this, it'll hold the first 5, and then it'll close it back up when it hits the mean reversion to the volume weighted moving average again. So I was like, fuck it, let's go. You can generally tell whether or not a certain setup or a certain, I don't know, indicator or something like that, you can generally tell if it has some sort of an edge that you can use to your advantage, just based on looking at it, right? Like I can go and I can just be like, let me close some of these out. I can look at this and just be like, oh, look, there's a little bit of an edge here on the MI. I can probably use this. Like if I get divergences, I can probably, make some money off of it. So you think, all right, I'm gonna build a strategy around playing bullish and bearish divergences on the MI. And this is just purely indicator based strategy. I can see two of them right off the bat here. You got this big one here, which is nice. All right, nice big bull divergence. And then you got a nice bearish one up here. Goes like this. Price trends up. So I'm thinking, okay, shit. So I have an edge, obviously, in terms of direction, right? So for me, it's 3 steps, right? First step is I want to have an edge on, direction, whether it be price is going to continue based off of this strategy or price is going to reverse based off of this strategy, right? If I have a predictive edge on knowing where price is going to go, or at least better than a 50-50 chance that price is going to go a certain direction when X setup appears, that's step 1 for me. Step 2 for me is always, okay, how do I determine invalidation for this, right? How the hell do I know how hard to hit this, right? Where like, let's say we have divergence here, right? You don't notice it until it comes up a few candles, so you don't spot the divergence until you're like right here, right? You don't spot the divergence until the bounce, because that's normal. You're not going to spot the divergence at the bottom, so don't even think about it, right? You get at the bottom, you're just getting a couple greens. You don't get the divergence until, basically that little red candle or the big green one that marks the top. So, you spot the divergence, you're going to buy the fucking top of this little move here. So you got to think, all right, where the fuck am I going to be wrong on this? I'm a fan of using ATR for stop losses and invalidation. Obviously, this was a big descending wedge here. This is an inverse head and shoulders, kind of, so you could always stop under the low. What I like to do is I like to take the ATR. Make it so you can at least see it. I like to take the ATR, and I'll generally take 1 times the multiple of it. So at that low, the ATR was 33. So I'll generally go $33 underneath this low for a stop. So my stop's like right here. All right, so this is my stop. This is my entry. And then, when I'm looking for targets, I'm not actually a huge fan of picking out targets in advance, at least not concrete ones. A lot of traders are going to gripe about that. I can already hear Trader Dante's videos echoing in my head that, if you don't have a target, then you're a cunt. I kind of disagree, but, that's because I trade Bitcoin. I guess if I traded more legacy markets, if I traded legacy markets more often, then targets would be a good idea. But this is Bitcoin. One of my best trades in the last year or so was basically playing a setup just like this, right, at 7,200s back in October of 2019. And I just went long with 90,000 contracts with a 1 ATR stop under the low, and I didn't have a target set. And I went and grabbed a beer, came back, we pumped $300. I said, oh, fuck it, this looks strong. I'm going to wait and see what happens. And then we pumped to 10K. I made about 3.5 Bitcoin in like 3 hours because I just didn't have a target. Bitcoin likes to fucking truck. Same thing with this, right? This is a 15-minute chart. You're playing bullish divergence off the 15-minute. If you're setting a target, you're setting this level retest here. Right, this is going to be your target without a doubt. All right, if you're playing this. And this is fine because the risk reward is really fucking... I mean, you're at least going to have one. Yeah, 1.25. That's pretty damn good. because on you're going to have probably a 60-70% strike rate with a strategy like this. Anything over 50% is good to go with 1-to-1 R. You're going to make money with anything over a 50% win rate. But we ended up, what did we end up going to, like 6-7? Yeah, we ended up going to fucking 6-7. So when I catch a big move like this, like if I'm hitting this long and I'm riding it up and I'm seeing, oh fuck, we kind of keep going, I'm gonna be looking, I'm gonna zoom out and I'm gonna look for either a higher time frame target or some other bigger structure. And so obviously, POC of this big range was probably, I don't know, probably like here. So I would have closed at 66.60 for sure, no doubt in my mind. We went up up higher than that for sure, but not after ranging for half a day. But yeah, if you want to set targets, you can. I was actually told someone in DMs yesterday, I think it was Monkey actually, that when I'm scalping personally, I will always set a take profit for half of my position at 2 times my risk, so at 2R. So if my risk here, I'm looking at 101 points, so I'm going 202. So like my first take profit is going to be here. No matter what, and then I'll close half the position here. Because then even if I get stopped out on the rest of it, I'm at least capping myself. I move stops. A lot of traders don't move stops. After I take half my profits, I'm usually moving my stop up to break even on the rest of it. Because it's not a risk-free trade then. I'm not really giving away any opportunity either because I already took 1R out of the position, right? So if you're taking partial profits, you can move your stop to break even and not be a cunt. Okay? That's, I guess that's a TLDR version of this. Yeah, and then so that was the second step. So third step of my edge is how much size do I want to go into. Obviously, if you're just calculating your risk by this, the question of how much size to go into a trade with is just simply one risk unit, whether it be 1%, 2%, 3% of your stack. It gets a little more complicated than that. I'll go and I'll usually start with like 1% right off the bat when I don't have like a lot of data, right? If I don't have hundreds of trades to sort of look at, I'll just go 1% of my stack for risk and just go from there. Otherwise, if I've got tons of data and I think, shit, this strategy has a ridiculously high strike rate, something like 83% strike rate, and, out of the last 400 trades, the most it lost in a row was 3 trades. So I'm going to be looking at that and be like, well, why risk 1%? Right? If I can cap my my potential drawdown to 12-15% of my stack at most, why would I risk 1% when I can risk 3 or 4% of my stack and stay within my drawdown margins? So after you get enough data and after you get enough trades, you can sort of look at, okay, how many consecutive losers did I have in a row? What's the strike rate of this actual strategy? And then you can adjust how much of your position or how much of your portfolio you risk in a single trade at that point. So it's threefold. You got to look at, you need an edge for direction. So you need to have something that gives you an indication that price is more likely to continue or more likely to reverse. Then you need a mechanism for using a stop loss. And for me, it's just 1 times the ATR under the low. It's easy as it gets. You don't have to look to the left and be like, oh fuck, which one of these 13 areas of support is going to hold. You don't have to worry about pretty much anything, right? You just look down here and say, oh shit, the ATR is 33. Okay, 33 points under the low. Stop loss is in. Done. If the strategy is good enough, and if it's a reversal strategy, even if it's not, like if it's a continuation strategy, so what? You go 1 ATR underneath the last low. If you're going to go, if your strategy is simply you're just buying trend line retests, right? I buy this trend line retest here. My stop loss is just going to be underneath the last low of the trend, right? I'll go 1 ATR underneath 62.39 right here. My entry would be the retest here at 62.75. So I'll go, however much this is, 43 points underneath this low. So my stop would be like 61.90 for 62.75 entry. And then that's it. That's how I'm going to go with it. And then for exit criteria, you can do whatever you want. You can ride the trend, you can use oscillators to determine exhaustion. There's a million ways to do it. So that's all I'm going to say on that question. Right time frame to trade. Man, whatever is comfortable for you. Look, price is the same on every time frame. Right? How price reacts at support and resistance is going to be the same on the 1 minute as it is on the daily. Right? It's either going to bounce or it's going to keep going. So really, it's just about doing whatever's comfortable for you. Time frame wise, if you're using an indicator based strategy like divergences, you're going to want to select a time frame that you're comfortable with the frequency of trades. Obviously, more trades equals higher commissions, which is going to cut into your potential profits. Can also make the difference between whether or not you actually make money, right? It can be the difference between making money and losing money pretty quickly. Also, you have to consider potential strings of losers and winners. Generally, the lower time frame you go, the higher likelihood of stringing losers together. So your strategy needs to adjust for that. You need to go lower risk. I risk half of the amount of Bitcoin on a scalp that I risk on a swing trade. So if I'm risking 0.2 Bitcoin on a scalp, I'm risking 0.4 Bitcoin on a swing trade. Just because the odds of me stringing together 6 losing trades swing trading, pretty fucking slim. Odds of me stringing together 6 losers scalping, pretty fucking high. That's not really a function of strategies. I mean, it can be, but really it's just a function of sometimes on lower time frames, you're just going to get a shit market one day, and there's not going to be anything you can do about it. The market's just going to suck. Am I going to do this? This is just going to be on YouTube. It's recorded, though, just to sort of, nip that in the butt. That's everything. This is all going to be recorded. It'll be saved on my YouTube channel so you can review it later. Evil Gemini, the scalp returns candles whatever color you want it to. See, I can change it to whatever color I want. I can make it... I guess I have longs purple. I can make shorts, red if I want. But, the candles are red, so I can't really view that well. I was using light blue for a while. I just liked yellow better. Bojo's death. I don't even know who the fuck Bojo is, man. Over leveraging's been your biggest problem? What do you mean by over leveraging? Look, it's the same thing with Anisha's question, right? Simply, you have to, if you're gonna go through a strategy and plan it, you have to know how much of your portfolio you're risking in every single trade. Right? I don't think you necessarily need to have predetermined targets. If you struggle with taking profit, if you're catching winning trades and they're running 4R in your favor or something, and you're up 6-7% of your account on a trade, and it's unrealized, and you didn't take profit, and it goes all the way back down and stops you out or whatever, break even or for 1R loss. If that's a regular occurrence for you, you need to start using predetermined targets. You can do something like what I do, which is just using 2 times my risk for take profit and taking half the profit of the trade there and then letting the rest run. Or you can just take it all at 2 times your risk, 1.5 times your risk. I mean, look, if you have a 50-50 chance to win a trade, if your strategy is 50% win rate, you only need like 1.1 R in order to make money after fees, right? So if my stop is 60 points away, I can set up take profit for 90 points away and win half of my trades, and I'm gonna make money in the long term. I'm gonna make a lot of money, a fuck ton of money over the course of hundreds or thousands of trades. I'm gonna make a ton of money just by having that kind of expectancy. It's huge. Okay, further questions? You guys can also post charts, setups, or ideas that you're thinking of longing or shorting on a specific asset in the Discord, and I'll sort of critique the trade. If you're putting your stop in a retarded place, I'll let you know, that kind of thing. I mean, simply put, like if you're gonna sit down and trade every day, your goal is literally just to make your balance grow every day, right? That's your goal. I mean, it's pretty simple when you put it into that perspective, right? Um, all you're looking to do is just grow the number on the top right of the screen every day. You're just trying to make that number bigger, no matter any which way you can possibly accomplish that. That's all you're really trying to do. And if you have like a bad attitude about it, you're like, oh, the market's been shit, my strategy's been shit, this doesn't work, everyone's getting chopped up, this is terrible, blah, blah, blah. Don't even bother fucking sitting down for the day. Just go do something else. If you have that bad of an attitude about trading for the day, there's no fucking way you're gonna make money. Like, not a chance. And these, for whatever reason, my YouTube keeps updating in like a very delayed fashion. I don't like that. I think I need to actually go and watch the stream. I'm gonna do that. I think I need to actually load the stream because this continues to happen. Okay, Michael, you understand how to calculate position size, 1% your total account, how you figure out position size when you add margin. Look, a lot of brokers have that added in, man. Whether you're trading on BitMEX or Prime XBT, even if you're on MT4, like you just kind of can drag, you can drag your stop loss and take profit on a limit order up and down, and then just do the math in your head from there to figure it out. But like on Prime XBT, if you go and you click buy on the chart, um, it'll give you an option to add a stop loss and add a take profit order. You can click stop loss, put in your stop, and it'll tell you how much Bitcoin you're risking on the trade, right? How much money you're going to lose if you get stopped out. And then from there, you just increase or decrease contract size or lot size, right? So you don't move your stops, you adjust your position size so that the amount of Bitcoin you lose is equal to whatever your determined risk is, 1%, 2%, whatever. Oh, how do I manage a long-term swing and not to take profit early? I mean, that's so I do. How do I say this? If I'm swinging something long term, I'm actually going up in time frame as I enter the trade, right? So I might I might see something on the 4 hour. Like I could see I didn't even see this until just now, but this looks like an SR flip, right? So I would want a long down in this box for sure. I know that sounds stupid to fucking long the top, but I'm just let's pretend that this isn't Bitcoin for a second, for the sake of this question. So if I'm long in this box and we start moving up, we start doing, and I'm looking at my P&L go up and up and up, and I'm thinking, if I get to like right here, I'm thinking, fuck me, this is a lot of money. Should I take profit? There's resistance right above, right here. Should I take profit here? This is a lot of money. It starts going down, starts going down. I'm like, fuck, I should have taken profit, And then you take profit at the bottom. And then you just watch it rocket up right after. That's how most people do it, right? That's a function of trading your P&L. You shouldn't be worried about what your balance shows when you're swing trading. I disagree when it comes to scalping. I feel like you should be trading your P&L when you're scalping, because if you're feeling antsy about a trade when you're scalping, you can just close it because there's going to be another trade in like 10 minutes or 15 minutes, whatever. But when you're swing trading, you could potentially miss, market shifting moves if you're closing early. So generally, I focus on the strength of the movement I'm looking at. I like to use indicators, specifically oscillators, to look for examples. So let's go over here because this was a big. Right, so we longed 6Ks, right? We got long down here, so it's a matter of like where the fuck do you take profit on this entire move up, right? Let's say you have a nice clean trend here. And then we break trend. So you're thinking, fuck me, we broke trend, I should close. Right? I should close. And then it just keeps going. Again, like to just use indicators for this. There's no harm in looking at this and being like, fuck me, look, bearish div on the MI again. Holy shit, who would have. Look at that bearish divergence. Right? Fuck me. I should close on that divergence, right? Because then it fucking nukes and loses trend. So of course I'm going to close the trade here. Why the fuck wouldn't I close trade? Right. So I close it here, but then it goes down more, and then you see this and you're like, fuck, what do I do? Right, what do I do with this? I got a long signal. We did just have a nice big move up. I've got this old range here. I got this old high here. You think, fuck, I'll re-enter my trade, or you wait for it to go up. Maybe you wait for it to break this resistance here, and so you enter up here. And then that's fine. You can take profit, and then if it continues, you re-enter the trade. Stop on, ATR under the low, whatever it is down here. 156. So 156. And then enter. And then you just repeat the fucking process. Good trend. Look, holy shit, bearish divergence again. Who would have fucking thought? No way. Bearish divergence again. Get the fuck out of here. So I'm going to exit the trade. That's it, man. That's how I manage my long-term swings. I literally just use the indicators and I look to the left. I look to the left if I want to re-enter. If I don't really give a shit. If I'm swing trading, I don't really care about resistance. I know that sounds really stupid, but Bitcoin has a habit of melting through support and melting through resistance like clockwork. Look, you see this move here? What about all this support, right? Look at all these levels here. Do you think Bitcoin gave a shit about any of these levels? Fuck no, it didn't. Didn't give a flying fuck about any of these levels. So, when I'm entering a trade, I'll use support and resistance by looking to the left. If I'm looking at exiting a swing trade, I'm just going to use indicators. Honestly, they have a higher strike rate than me looking to the left and finding support and resistance. Whether or not support and resistance holds is like 50-50. Fucking coin flip. Right? You don't know it's going to hold until after it's already held or already broken. At least with the indicators, if I can look for basic divergence in the momentum, I can tell myself, all right, there's like a 60-70% chance price is going to reverse on me here, so I'm going to exit. But that's how I manage a swing trade. I enter using support and resistance, and I exit using indicators. Hearing about too many indicators, not enough indicators, overthinking, stopped out too soon, blah blah blah. That's just lack of a plan, man. That just means you don't have a concrete plan. Michael, if you're going through that, you just don't have a plan. And look, a plan isn't like a holy grail, right? Because there's never going to be anything that nails it every fucking time, right? Unless you're like LARPing on Twitter, you're not nailing every trade. It doesn't happen. So if you're getting antsy and you think, oh, my indicators don't work, oh, my chart setup doesn't work, oh, my setup doesn't work, you're overthinking, you're not entering trades because you're scared, whatever. It's just because you don't have a plan. If you had a plan and you had numbers and data to back up that plan, you wouldn't have those fears, right? If you knew that, like, all right, so over my last 1,200 trades in the last year and a half of trading, my win rate is 61.3%, and my average winner is 1.3 R. Then you can safely assume you're going to win about 60% of the trades you take, and that you're going to make about 1.3 times your risk on every trade that you take, like over the long term, right? The thing is, like, numbers don't get happy or sad or angry or any of that shit, right? Numbers don't get greedy, they don't get fearful. So when traders tell me that they're struggling with pulling the trigger, or they feel like they're quote unquote lost, it's just because they don't have a fucking plan, and they haven't been logging their stats. They don't know their stats, and therefore they don't have any sort of a concrete edge in the market, right? They're just basically flying blind. You're just fucking punting trades at that point. And then when one setup doesn't work, you lose 6 trades in a row or something using MI divergences, you're just going to look for something else, and you're going to start punting trades with that instead. That's generally how most people think. I mean, it's a bitch. It's just a lot of fucking work. It's a lot of fucking work to go ahead and know your stats. But if you think like professional athletes, they're going to know their 40-yard dash, right? MLB pitcher is going to know about how fast their average fastball goes. NHL goalies are going to know, what their save rate is stick side versus glove side. Golfers are going to know, how far they hit a club on average. So why should this be any different at all? Even businesses have an idea of how much money they're going to make on X product. Right? They know what their revenues, what their earnings are going to look like per sale. So this is no different, man. You wouldn't start a business, you wouldn't go through, and make, 500,000 widgets at X price, and then go ahead and, list them each for a different price, and just, be like, fuck it, I don't know how much I paid for them, let's just sell them for this amount of money, without doing any research, right? You would never do the same thing for trading. So, like, why should you? Do I use indicators on higher time frames? Yes, of course. Scalping course available for lifetime members of TA. Yeah, right. There are no lifetime memberships right now. New ones. If you are a current member, yes. Otherwise, if you're a yearly member, you get access to that little, 7-episode course. I mean, granted, I give people what, I think it's 3. Three setups, if you will. 1 based on indicators, 2 based on price action, and a whole chart setup with how to manage stops and entries and all that shit. And that still works to this day. I still use that strategy. Specifically on the 7-minute. I like to use it on the 7-minute, 5-minute chart. Luca, long I took on the 15-minute the other night. Which one? I don't. Or do you mean? Fuck, I'm trying to remember. Or did you mean the example I was just going over? But I don't look for confidence that we were going to run the highs. Honestly, look, I know the trade you're talking about now. I know the trade. These highs here, right? This was the one. What time was it? Yeah, it was like here. I remember. No. What the fuck was it? No, it definitely was. Yeah, it was like right here. For these. Look, man, I didn't, other than, look, we took these lows. Right, we took these lows on this. And obviously Bitcoin is still within a range. It's not going anywhere. And we've been doing these up and down fucking BART moves like clock. Right, we took these lows before. Right, so I was like, fuck it, it took lows again here. Why not just go for the highs? That's about it. It's just thinking about, where's the market going to get liquidity from? As you can see, the range is getting pretty fucking tight now. There's now not much room for Bitcoin to do anything other than break. We're going to have a meeting of buyers and sellers probably within the next 3 hours. I think we're trying to close a weekly candle at this level, personally. I think this is just engineered just to fuck with people. To close this weekly over this 6,700 level. It's kind of important, right? Might be a trap. I don't really know. I'm just going to wait and see what happens. Speaking of attitude, blowing accounts, scared to pull the trigger on real money versus demo paper money. Oh man, look, I hate demo trading. Right? Demo trading, paper trading, complete fucking waste of time. It's completely pointless. You don't get anything from it, right? You can't even say, oh, well, I'm just doing it to test strategies. Because when you're playing your strategy in real life, losing 6 trades in a row is going to feel a hell of a lot worse with real money than it's going to feel on a demo account. And that's going to affect the way that you trade. So if you're looking at testing something out, or you have a new idea, just do it with a small amount of money. I do that all the time. I have several BitMEX accounts. I put 0.1 Bitcoin on them, and I just fucking let a strategy run wild on ProfitView. And I'm like, well, if it makes money, it makes money. If not, it goes in the trash can. That's just, you should never be demo trading or paper trading. You should always be trading with real money. Even if it's $50, $20, it doesn't matter. You should always be trading with real money. And if you're scared about blowing accounts, get used to blowing accounts, man. Some of the best traders in the world literally blow accounts on a regular basis. My advice to you on that regard is not keeping all of your money with your broker. You need some sort of system. If you're trying to compound an entire portfolio, again, don't keep all your money with your broker. If you're like, fuck, I've only got 10 grand to trade with. Great, you've got 10 grand to trade with. Well, no, you actually have 3 grand to trade with. Because you're going to keep the other 7 in case you blow an account based on some random bullshit. Right? How much would it suck to lose everything you have for trading due to some completely unforeseen circumstance that you couldn't do anything about? Right? Imagine being on BitMEX and being long at 5,100 and then just having them nuke it to 3,300 on you. With a complete overload and everything, no stops, whatever. Your stop gets canceled, some bullshit. You just lose everything on a fucking technicality. Right? It'd be complete shit. It would suck. And I know because I've been there. But you can't do anything about that. So the best thing you can do for your money is not keeping all of it on one, with one broker and on one account. I've got 2 scalp accounts, I've got a swing account, and I've got spot trading. And on top of that, I've got an IRA I trade stocks in. I have a stock and options margin account that I trade with weekly, and I've got an account that I trade forex and futures with weekly. I've got my money across 6 or 7 accounts, plus Bitcoin, not in cold storage necessarily, but plus Bitcoin in custodial storage, plus money in a bank account. So if you think, oh fuck, I only have 2 grand to trade with or something, then you're going to be taking that risk. Because you can't, you should start small, but I understand that, if you work a job and you make 65K a year at your job, you know, trading a $2,000 account to make, $30 on a winning trade isn't exactly the most fun thing in the world. But you have to start somewhere, and compounding interest is pretty important. Regarding Bitcoin trends, yeah, I mean, look, man, Bitcoin in 2018 was all about the BART waves, right? Everyone remembers the BART memes, right? Those were there. And then in 2019, it was honestly all about the Arthur scams, right? Arthur's fucking laughing, smiling face all over Twitter and stuff like that for scam candy. And now this year, it's just memes about the slow grinds, which I personally hate the slow grinds. I think this is the worst market to trade in the whole fucking world right now. At least for me, it is. It's not a very good market for me. But yeah, I mean, the market's constantly changing. If you're not at least, trying to take ideas and turn them into profits on a regular basis, you're never gonna have any sort of longevity in this industry. And this really brings up a good point about quote unquote price action traders, or people that just trade order flow and fucking blocks and breakers. The ICT people, basically. Look, the minute Bitcoin starts doing this, let me show you. The minute Bitcoin does, breaks under here or breaks over here, order flow trading is going to have zero edge. All right, everyone that that trades order flow right now, trades blocks and breakers and swing highs and swing lows and SFPs and shit like that. Like the minute Bitcoin starts trading above these highs or below these lows, it's fucking free for all, right? Those traders will lose all of their fucking money if they continue to trade the same principles, right? So if you spend the last year and a half, in ICT's mentorship, and you know how to trade price action really well, Bitcoin's gonna come, it's gonna start trading above, right? And it's gonna put in new highs every week, and you're gonna look to the left and you're not gonna see shit. And you're going to try and long retests that are never going to happen, and you're not going to make any money in the market. Same thing with down here. We break it down here. Bitcoin starts going down to like fucking, 3 digits or $1,000 or something like that. You're going to be looking to the left, looking to short, resistance retests that are never going to happen, and you're going to be out of the market. Right? Order flow trading is great for, wait for it, Forex. Yeah, I know, it's baffling, right? Why is order flow so good for Forex? Well, that's because Forex trades in a fucking range. Right? Forex has been ranging since the beginning of fucking time. It is very, 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 very rare to see a Forex, pair start trading at all-time highs and all-time lows. That's a pretty rare occurrence. And typically, order flow traders will not trade currency pairs that are making all-time highs and all-time lows. So if you're trading currencies, there's always going to be something to the left for you to look at, right? We can break under these lows on the euro. Guess what? There's still something to the left, right? We break underneath here on the euro. Order flow traders aren't going to want to touch this shit at 75 cents on the dollar. Not a fucking chance. So, I guess what I'm trying to say is you should always be you should always be trying to develop new edges and strategies in the market. When testing strategies, when I look at the drawdown of the strategy, say max is 10%, how do I use that for adjusting my position sizing? Basically, I'll go with whatever drawdown percent that I'm personally comfortable with. I'm willing to take up to 50% drawdown on my accounts, sometimes more depending on what I'm trading in the account. I'm willing to take a lot of pain compared to most traders just because, again, I don't keep all of my money with my broker. If one account running one strategy goes completely bust or goes 50-60% drawdown, I'm not going to lose the farm, right? So I can tolerate a lot of drawdown. So I'll adjust position sizing so that my maximum relative drawdown ends up being, typically I'll take that 10% and I'll say, all right, so I'm going to use 5 times that position sizing. So the max will be 50%. And then I'll take a quarter of that position size off just to, accommodate for, maybe there's a trend in the market that the strategy hasn't encountered before or something like that. So then I'll be trading with, the size that would put me at about 35% max drawdown. Because then if a black swan event occurs, I still won't go below that 50%. Right? That gives me a little buffer there. But that's what I do when I'm testing out a new strategy. If you're, like I said, if you've only got 10 grand to trade with and you're putting $3,000 into an account for a strategy, you probably can't afford to lose half of that money. If you're losing half of $3,000, you're losing $1,500 of $10,000 is 15%. That's quite a big chunk of your portfolio to piss away on one strategy. I would generally keep it to like 5 to 10% portfolio loss at the most. Right? If I nuke a scalping account, I'm losing like 2.5-3% of my total portfolio. That's if I completely fucking blow an account. Like blow it to zero. I'm only losing about 3% of my portfolio. So it doesn't really hurt me that much. I don't really care. I'll care because I'll be disappointed in myself. But I'm not going to be, panicking about money for weeks on end. And for those of you that don't have a lot of money to trade with, again, just start small. Compounding interest can do some crazy, crazy things. If you make 11% per week on your account and you start with, $6,000, after a year of that, you're going to be at, $200,000, $300,000 to trade with. Compounding interest is huge. Not saying that you would let your account run up to $200,000 and not take some profit off of that, take some money off of that broker. If I started with $6,000 and I traded it up to like $30,000, $31,000, something like that, I'd be taking half of it off and stashing it away, and I would just trade with the $15,000 that's on there instead. But that's generally how you start with a smaller account. Proser, can I review how I use fibs on a daily scalping basis? Sure, man. This is actually pretty fun. So I use Session. I believe that Bitcoin runs daily liquidity. I feel like structure matters, but I feel like Bitcoin runs daily liquidity from the open to the highs to the close, so on and so forth. So we have a high here and a low here, and we run the highs. So I wait for one or the other to get run. Right? I wait for the daily lows to get run or the daily highs to get run. So daily highs got run right here. So they get run with So I'll just draw fibs from the lows of the day to the high of that run, or at least what looks like the high of the run at the time. And if I'm taking this short up here, this is actually a really nice reversal pattern candle-wise. This would be a gift to short. But I'm generally not taking trades off the 15. I'm generally taking trades off like the 5 or the 3. So if I'm taking the, I just go for the 618-705 pocket. So I'm constantly looking 618-705. So if I'm taking this short, I'm going to expect price to move back down here to the 618-705 pocket. If I'm taking short here, I have my high here. I'm going to go 1 ATR above that high. 22 above that. So my stop's going to be here. And I'm looking for the 618-705 pocket to take. It ends up being about 1.5R for a trade, which is pretty damn good for a little day. And I just repeat the process, right? Daily lows got run. Look at that. Daily lows get run. Okay, so I have a little long print here. So I'm going to get long. And again, let's just redraw the fibs, right? This is great. Down to the daily low, okay? And I'm taking long, scalper. There's a long, so I'm going to get long here. For the stop, 1 ATR under the low. ATR at that point is pretty high. We're at about 37. It's going to be a pretty shit risk-reward trade, but you know what? It's fine. It's high strike rate. And then again, I'm looking at the 618-705 to take profit. 618's here, 705's here. There's the middle of the pocket. And here's the... Look at that. Beautiful. It's only 0.78R, but with a, you know, a basically dump down there that fucking aggressive, what do you expect? On the Binance chart for like Prime XBT, this is going to look a bit different, right? The R is going to be a lot higher, guaranteed. But yeah, this is generally what I'm looking for. All right. You know, this is intraday, so that's two clean trades. You know, you get a short using indicators after daily highs get taken, right? And then again, using indicators to get long after daily lows were taken. And then you're just closing at the 618-705 pocket every time. After it happens twice, if you run the daily lows and then you run the daily highs and run the daily lows, you're pretty much done, right? You're done trading for the day here. So like this is, you know, you would ignore this for the most part here. But that's how I do it, Frozer. It's all about that 618 and 705 pocket, and always after daily highs and lows got run. Alright guys, daily closes in, so I'm going to call it. I hope you enjoyed this. It'll be recorded so everybody can review it. I know a lot of people, I could not make this time. Especially, people in Europe are pretty much going to bed right now. Tomorrow is Monday after all. But yeah, I hope you found this useful. We'll do this every Sunday. Come more prepared with questions next time, please. A few of you were pretty good about it. The rest of you were just kind of like lurking in the background, like, oh, all right, maybe he'll spoon feed me some good information, which I hope you think I did. But, yeah, I mean, I would hope that you come with some pretty good questions next time. There's a lot of shit we didn't cover at all. Tons, actually, which is good because then people will come with more questions and we'll hit those topics in turn. Alright guys, I'm going to sign off. Have a good one.